All right, let's talk about a tax form that most people in the service industry have heard of, and maybe even fear a little bit. We're going to break down IRS Form 4137. This is your complete guide to handling unreported tip income.
So let's just be honest for a second. You wrap up a long shift, you've got a pocket full of cash, and maybe, just maybe, not all of it made it onto the official report you gave your boss. If that sounds even a little bit familiar, then you're in the right place.
For a long time, filing Form 4137 felt like you were raising your hand and telling the IRS you messed up, and it usually came with a penalty. But what if I told you a proposed tax change could flip that entire script, maybe as soon as the 2025 tax year? We're about to show you how this form could go from being a problem to a powerful financial tool. To really get why this form is such a big deal, you have to see the bigger picture. All that cash changing hands creates what economists call a shadow economy. We're talking billions of dollars that are super hard for the IRS to keep track of. And Form 4137? Well, that's always been their main way of trying to bring that money out of the shadows.
Now, check out the form's official name. It's not just about tax in general. It's specifically about Social Security and Medicare tax, FICA. Here's the part almost everyone misses. Every single dollar you report on this form boosts your Social Security record. That means bigger retirement checks and better disability benefits if you ever need them. It's not just a tax bill, it's an investment in your future.
Okay, so before we dive into the wild new strategy, we've got to lock down the basics. The IRS has super specific rules about what's a tip and when you have to report it. And trust me, understanding these rules is the key to making them work for you instead of against you.
First things first, tip versus service charge. They are not the same thing. A tip is totally voluntary. The customer decides if they give it and how much. But that automatic 18% gratuity the restaurant slaps on the bill for a big party, that's a mandatory service charge. The IRS just sees that as regular wages, not a tip. And this is so important because Form 4137 is only for tip. Now, let's talk about the magic number in the world of tip reporting, $20. This one little number creates a really interesting situation, something people sometimes call the wage band loophole. So here's the deal with the $20 rule. You only have to report your tips to your employer if you make $20 or more in tips in one calendar month from that one job. So if you make, say, $19 in tips from your coffee shop job and another $15 from a weekend gig, you technically don't have to report it to either boss. But, and this is a big but, while those tips are exempt from Social Security and Medicare tax, you do still owe regular income tax on them. Okay, deep breath. Let's tackle the monster. You get your W-2 in the mail, you're looking it over, and then you see it. This random, confusing number in box 8 called allocated tips. It's not part of your wages, no tax was taken out, so what on earth is it? Think of this as the IRS's backup plan. If you work at a big restaurant or bar and the whole staff, together, reports tips that are less than 8% of the total sales, the law says your employer has to allocate the difference among the employees. That number in box 8 is just a guess. It's an estimate. The IRS is basically saying, we think you earned at least this much, and it's up to you to prove them wrong with good records. So you've got some unreported tips. Maybe you've even got that weird allocated tips number staring at you from box 8. How do you actually use Form 4137 to make it right? You are going to be shocked at how simple the math is. Seriously. It really just boils down to these 4 simple steps. Step 1. Figure out the total tips you actually received. Step 2, subtract the tips you already reported to your boss. That number's on your W-2. Step 3, what's left is your unreported tips. And step 4, you just multiply that number by 7.65% to get the FICA tax. That's it. A little addition, a little subtraction, and 1 multiplication. You got this. Okay, now for the really interesting part. Let's look at how this whole game could get turned completely on its head. We're going to explore a what-if scenario based on a proposed law that could totally change the math for reporting tips, possibly starting with the 2025 tax year. You know how new laws get promoted with these catchy slogans like, no tax on tips? Well, as this quote points out, it's almost never that simple. With taxes, there's pretty much always a catch. And here's the catch with this proposed law. It would create a brand new, awesome deduction for up to $25,000 in tip income, but it would only apply to your federal income tax. It would do absolutely nothing for the Social Security and Medicare tax. That 7.65% FICA tax, yeah, that's not going anywhere. And this chart shows you exactly why this tax trap could actually be a massive opportunity. Look, you'd have to pay that 7.65% FICA tax on your tips. But in exchange, you'd get to unlock a deduction that saves you from paying your regular income tax rate, which might be 12%, 22%, or even more. The bottom line? You would pay a little bit of tax to save a whole lot of tax. So what does this all mean if a law like this actually passes? It would mean that for those years it's active, the absolute smartest financial move you could make is to get every single dollar of your tips officially on the books. Let's see how that would work. Here it is, the new reality under this kind of change. You simply can't claim a tax deduction for money that the IRS doesn't know exists. Hiding your cash tips just to skip out on that 7.65% FICA tax would mean giving up a much, much bigger income tax deduction. Suddenly, being compliant becomes the key to a huge tax break. And this is where our little Form 4137, would go from being a villain to the hero of the story. The new deduction would probably be based on qualified tips. And what counts as qualified? Well, the tips on your W-2 times the unreported tips you declare online for a Form 4137. This form would basically be your golden ticket to turn that cash in your pocket into a tax-slashing machine. But hold on, I know what you're thinking. Isn't there a penalty for not reporting my tips to my employer in the first place? And yes, there is. That rule would still be on the books. So let's talk about that risk and actually put it into perspective. The law says the penalty is 50%. And yeah, that number looks terrifying. It's supposed to. But the real question is, 50% of what? This is probably the most important thing to understand about the penalty. It's 50% of the tax you owe, not 50% of your tips. Let's do the math. If you had $1,000 in unreported tips, the FICA tax is $76.50. The penalty is half of that, just over $38. It's not great, but it's a heck of a lot better than the $500 you were probably imagining. Plus, you can often get the penalty waived if you attach a simple statement explaining you had a reasonable cause for not reporting. So that brings us right back to the beginning. For decades, Form 4137 has been something you deal with after the fact, a consequence. But with these potential new laws, it could be transformed into something else entirely. By using this form to get your tips on the record, paying a small tax, and potentially unlocking a huge deduction, is it a penalty anymore, or is it a paycheck? For the first time, it might just be the most profitable choice you can make.